What's up, what's up, what's up? Maybe Trillion, Abdul, Fade Doctor, what's up, guys? I'm gonna let a couple people get in here and we'll get it going. Post on Twitter. Let me get the economic calendar. What we got this week? We had NFP last week. Slow start. All right, let's take a screenshot of this. How's everybody doing though? I'm doing good, man. Appreciate it. Blessed and highly favored. I can't ever complain. I really try not to ever complain. You know, obviously we all go through our Our moods, we have bad days, bad moods, but I really try not to complain because I feel very blessed always. All right, let's look at the economic calendar. We'll get started with that. All right, so let me pull this guy up. We always start our week with the economic calendar, understanding news drivers, volatility injection, right? This is very key. You want to be focusing, if you have an expansion model, right? If you have a model that it has edge and expansion, you want to be focusing on tickers, stocks, whatever it may be, whatever instrument you trade, whatever. You want to be focusing on ones that have news on the day. You want to be positioning yourself on the days that we actually are willing to expand. What happened with last week's forecast? I think I was just busy. I'm not sure. I probably had something going on last week. I usually don't miss them. I'm usually really consistent with it. I was probably just busy or something happened. There's nothing like specific that I can think of. Anything significant. I was probably just really busy. But all right, so Monday we have no news. We have bank holidays for Euro and Swiss franc. So Monday and Tuesday already are looking very slow. I actually just realized this is only US. Wait, is this only US dollar? Because this shows Euro and Swiss franc. Is there really nothing for any other currency this week? Hold on. There's just no red folder for any other currency this week. Oh, there's just the pound. Okay. Yeah, wow. Okay, interesting. So you literally only have pound red folder this week, and it's only USD. So we have Monday bank holiday, right? Swiss franc Euro, no news for anything, no red folder. Tuesday, no news on anything, no red folder for anything. Wednesday we have CPI, which is a big three news driver, so we could see price kind of want to hold out Monday, Tuesday until Wednesday, 8:30. So all the USD red folder, all the USD volatility, I would expect it to fall through after Wednesday. So Wednesday morning is really the window. Wednesday through Friday after Wednesday morning is that window of time where I want to really look to get involved. Obviously, you know, I always put a disclaimer. Monday, Tuesday, I will trade. You know, I will take trades on days without news, but I need to see that price actually wants to move. So it's just a good rule of thumb, right? You don't want to be forcing your model. If you have a model that's built off expansion, if you have an edge, if you have plus EV in a certain phase of price. So if you have, you know, positive EV in trending markets, expanding markets, you really want to focus on positioning yourself in those market conditions because that's where you have the most edge, right? So for me, that means Wednesday through Friday is more of my area of focus because that's when I'm expecting volatility injection from these USD news drivers. So yeah, big three Wednesday. Monday, Tuesday we go hold up and wait, no news. CPI Wednesday. Thursday we have pound gross domestic product and then PPI on US dollar, and then Friday we have consumer sentiment. So Wednesday through Friday to me looks to be the days where you want to look to get involved. It looks much better and much more willing to expand from Wednesday and onward. So we'll be a bit more skeptical of price Monday, Tuesday, and then from Wednesday through Friday, we'll look to position ourselves in some expansion. But yeah, so we'll start with bonds and then we'll get to dollar. Right here, we're looking at bonds on the monthly. I think my drawings got messed up. Maybe the contracts rolled over or something, but I view this as a stop hunt, right? We have bearish monthly order flow. We did run into the SIBI, but this SIBI was already used. So for me, it's more so just viewing this as a stop hunt to the downside. Let me fix the position of this. So sell side stop hunt. Buy side stop hunt. We ran the sell side down here, right? We're wicking and respecting that sell side. That was a major order pairing objective. And so what we talked about was after this went, wanting to see a potential respect of that area and retracement. Well, what do we see here? We see price trading into these internal range liquidity. right? We have these two weekly bearish fair value gaps, right? We traded into the weekly internal. And now we have a clear respect candle of that. A respect candle indicated by this wick. The body is closing below. The wick is showing a clear respect of this internal. So it wouldn't surprise me if you want to continue with lower bonds towards the sell side down here. So we swept this sell side, major order pairing objective. Now we had our retracement to offer fair value, and we can potentially look to seek liquidity again. So we may have sustained bearish bonds here. We might look to target the external now. I love your background music. Do you mind sharing? It's lo-fi. It's lo-fi music. Let me look. Look up after the stream. Look up "Lo-Fi" by Harris Heller. That's what it is. I think it's called Stream Beats. Lo-Fi Stream Beats by Harris Heller. That's all it is. So yeah, we're respecting the weekly internal. We are actually failing to offer fair value on the daily. So if we were going higher, you would have wanted to see it do so from here. We're seeing a disrespect to that gap. So I'm looking at the sell side, right? We're seeing failure to offer fair value. So we want to see price seek the opposing liquidity. And if we're looking for the external on the weekly, then we're expecting this daily to not follow through, which is why, you know, for those that don't understand why certain gaps fail and why every fair value gap doesn't work, that's a very good example of it. When price is seeking external on the weekly, this daily gap is not going to support price higher, and we're actually just going to very easily slice through it like butter. So this was very quickly invalidated, and we're looking for the sell side now, and then potentially follow through to the downside right here. Four-hour flipped as well, so now we have bearish order flow. Every time frame acts as a compass for the ones above it, so these 4-hour bearish gaps are pointing us towards that sell side delivery we're looking for. Breakaway gap here. I would really just expect this to want to reach for these lows now with the way it's, you know, expanding. There is this gap as well. And yeah, so we're looking at external and bearish bonds for me. As of right now, obviously things can change with more information, but as of right now, that's what I'm seeing. Dollar swept this previous month low. We have another sell side external right here of that range. Dollar has not been moving very clean. We've talked about it the last few weeks, in my opinion, have not been the cleanest on dollar. A lot of chop, a lot of just ugly respects. You know, this respect of this internal range was not very clean. This isn't really what you want to see. I actually would have been looking for this candle to be expansion and follow through, and we obviously didn't see that. So pretty weird respective internal here. But that being said, we saw a previous week low. If we look at the daily, not much, just consolidation. So dollar really isn't high probability in my opinion. Previous day high, previous day low, we can look to mark out. When we have these areas of consolidation, you're really needing to lean on the 1 hour and 4 hour and kind of just operate from previous day high to previous day low, because we're just chopping in this range. So we're not really expecting price to have a clear intention. It's just ranging. So if we look at the 4 hour, right, this isn't the cleanest price action, but you can operate at these range externals to get a draw. So that's not to say that we can't trade majors, but you need to pick and choose your shots and look to trade times when majors are obvious. Like when we swept these lows, it felt clear to me that this wanted to reach higher. This sell side right here, and once we played that external, looking for a retracement back into the range, so it was clear that I wanted to see higher on dollar. So you just have to pick your opportunities if you're going to trade majors and wait for dollar to be clear at times. But a lot of chop right now, not the cleanest expansion, and you really don't, it's not high probability to be trading majors when dollar's just chop. But if you can find your clear draws and dollar's actually moving, then you can trade majors. Indices. We took the sell side low. We talked about on the 6 month how this looked really clean, to be honest, into the area of fair value, right? We have this overlapping order block with a fair value gap, clear retracement to offer fair value. Looks nice on the 6 month, but on the monthly is a bill as clear. We're disrespecting this bearish gap. aka failing to offer fair value. And so I'm actually looking for more buy side delivery here. And it looks bullish on the monthly. We have these new highs up here. Not much to pull from the weekly. The daily, I don't like how they're engineering these lows, this trend line, but I'm not seeing much to want to retrace to right now in terms of a gap. Yeah, I don't love the way that we're kind of wedging higher though. I don't really use wedges like that, but I like to look at the liquidity. We want to see those low resistance liquidity run signatures on the opposing side of the curve. But in terms of the daily, we closed below this gap, ended up following through higher. We're kind of just, you know, wedging right now. We're creating this consolidation to the upside. It's just a slow grind higher right now. NASDAQ, failure to offer fair value as well, potentially reaching for that buy side. We have this weekly internal here that we never offered fair value at, which is quite surprising to me. You know, once we got this respect of this high and we began to flip and kind of point lower, I was looking for a retracement in here. We didn't get it, right? So it's not always going to play. You have to react to the information that's being provided, right? So when price didn't reach for this internal and we didn't offer fair value on NAS, and then the order flow ended up flipping and reaching higher, well, I'm not marrying that bearish bias towards the, like right here. You see how we didn't follow through on the weekly towards these lows? Once we begin to expand and order flow just continues to print higher, I'm able to get back on side with a bullish bias. I'm not marrying this. That being said, in here I was looking for a retracement to offer fair value. We didn't get it. Price printed bullish order flow and continued to respect this kind of raise. So still bullish, right? And I'm going to continue to be bullish until order flow tells me otherwise. So even here we disrespected the daily gap, but we haven't flipped the order flow. We're actually still respecting it. So not the cleanest, you know, respected internal. We closed below, but ended up respecting the OB right here and essentially looking for higher prices. Four-hour internal. Still bullish indices for me. I do feel like they're kind of due for some retracement soon, but we'll see. I need some clarity and more information from indices before I really look to trade them. Please correct me. When I do top-down analysis on the higher time frame, confused with the PD array on the left side of the chart. So I only look left for liquidity targets. I only look left for literally liquidity. There's no other way to explain it. I only look left for liquidity targets. I only use the right for PD arrays to trade off of. So I don't trade off of targets on the left, and I only use the current order flow to frame my trades off of, right? So I'm not looking to take a short off anything over here. I'm not looking to take any trades in any direction off anything from the left. I'm only looking at it as liquidity targets, objectives for price to reach for. I'm only looking to trade off of PD arrays within the current price legs. So if we go and we look at the 4-hour, I look for the most recent price leg. I'm only looking to trade off of this kind of raise in this leg. So I'm only trading off the current order flow, the most recent swing high and swing low, and I'm using the left just as targets to reach for. So really the best way I can explain it. YM monthly, tag the internal but isn't following through lower. Weekly, buy side objective right here. Can mark out these, right? See how I'm marking out these buy side objectives from the left, but I'm not looking to trade off of them. They're just targets for me, for price to reach for, because we know price is always seeking liquidity or offering fair value, right? So I'm looking for price to create most recent swing highs and swing lows, current price legs, offer fair value, and seek liquidity. Once we offer fair value of this leg, I'm seeking the liquidity. Once we offer fair value of this leg, we're seeking more liquidity. So I trade off of PD arrays from the current legs on the right side of the chart, and I only use the left for targets. Yeah, I look at gold. Gold is down here. It's GC. I'll get there in a little bit. Same thing with the daily. I don't like how we're creating these like failure swings and kind of just consolidating higher, but I do think price wants to potentially continue higher here. With the 4 hour, there's a lot of sell side being engineered in here though. 4 hour gap. You see all these lows? Like this is something you would want to see on the opposing side of the curve if you were to frame a short. Because when you have failure swings like this is the buildup, right, of liquidity. This is the engineering of liquidity. And when you get these failure swings, this engineered low resistance liquidity, you get these very explosive, almost like butter, knife through butter type moves, where it's just boom, boom. I'm not calling for a short yet, but that's something you usually want to see on the opposing side of the curve. But we need more clarity for price to want to offer fair value, and I would need to see order flow flip. So until then, I'm holding my bullish bias. We trade legs into higher time frame gaps if we see an order flow flip on the align. That question just confused me. Could we trade legs into higher time frame fair value gaps if we see an order flow flip on the aligned time frame? You'd have to like show me an example, brother. Sorry, I don't know if it's like the wording, but I'm not understanding that. If you have like a picture or anything, if you want to drop it in the Discord, I'll happily look at the picture and answer it. Legs into gaps if we have an order flow flip. Yeah, I don't know. You have to show me a picture. It's confusing me. But what did I just look at? Dow. So we got Russell. Yeah, send an example in the Discord. I got you. Monthly internal, again, we had that respect candle. So if we were going to go lower, you really would have wanted to see some expansion here. If we're going to go lower, we either want to see the previous candle high get swept and print lower, or you want to see this just follow through for external here, but it hasn't, right? We haven't followed through. Previous candle high is my, low hanging fruit target. I'm bullish towards that high. We're almost there. And I'm going to hold my bullish bias for the aforementioned reasons. All right, so buy side targets are being met. Price is kind of just slowly grinding higher at the moment. We had this internal play, nice. And yeah, I'm going to hold my bullish bias until order flow flips, until I get new information that leads me to believe otherwise. There's our daily internal respect. Eyes on these highs here. 4 hour most likely is a gap right in here, yup. But we might just bag that and print higher for the buy side. So we have that overlapping level, that area for value right here on the 4 hour. But again, we might just reach for these highs. Straight there, we're already bagging this. So potentially reach for these highs up here before seeing any form of retracement. Euro. What was my direction on dollar? I don't forget. It's just consolidation. Oh yeah, so dollar is just straight chop, and my biases, my draws on dollar are going to really depend on the direction of the day. But right now, I would be looking for higher towards previous day high. So in short term, very, very short term perspective, bullish towards previous day high is how it's looking. And then from there, once we sweep previous day high, we can potentially take these highs and work back into the range. So we'll just have to see. Very, very short term though, I would expect a 4 hour gap retracement and then previous day high to be reached for. So bullish in the short term. Euro looks quite bullish on the monthly. Weekly. Daily, same thing. We're getting these engineered lows. Consolidation, really not clean on the daily. Obviously, this is going to pretty much mirror dollar, just inverse. And so there's not much here for me that I like. Again, because I'm bullish dollar towards those highs, I'd be looking for Euro to potentially want to reach for these lows. We don't even have gaps to the downside here, which I don't love, but eyes on that sell side low. Monthly gap right here. We swept this high. We're kind of just messing around above it at this point. Weekly internal is here. Interesting. We have that. Could see us want to reach for that. I don't really love dollar or majors right now. And again, we have these lows here. So we'll see how this plays. The 4 hour is potentially flipping as well, which checks out. We have all these engineered lows. And then I'm bullish dollar in the short term. So we may want to continue to reach lower here on pound as well. And I'm favoring a more short-term bearish bias. A more short-term bearish bias on euro and pound. Lows in here again, we're seeing all these like engineered lows. Look at that. Oh, dude, this is gonna get fried at some point when we get some clear. If we get a very bullish dollar at any point through here, these lows are gonna get fried. I was looking at gold the other day. I sent my friend I just want to show you guys this because it's funny. I sent my friend a picture. Here, let me get it. I'll put it on the chart. I just thought this was funny. Sometimes it's really obvious when they're engineering the lows and highs. And so like the other night, earlier this week, it was really obvious that they were going to run these lows. So I just sent my picture, or I sent my friend a screenshot before bed. Yeah. I'll show you. It might say it's too big to put on. Yeah, hold on. I gotta take a screenshot. Sorry guys, 1 second. Picture, screenshot, boom. So this is the other night on gold. Sometimes with these low resistance liquidity runs, like when I'll show you why I felt that way on gold, but I sent this to my friend on Discord. Oh, that was the after. Shoot. I took a screenshot of the after. I sent this to my friend and bro, I can't. Oh my gosh. I can't take a screenshot. Oh yeah, Zay's here. I sent this to Zay the other night. I was like, bro, they're cooked. Sometimes it's really obvious with the low resistance liquidity runs. If it just lets me put it on the chart. My bad, bro. It's such a struggle. Okay. This is what I sent him. The other night. Yeah, sometimes it's just really, really obvious when they're engineering these lows. And so like if you look at gold, I don't want to get sidetracked, I forget where I was, but it was very, very clear to me that they were engineering these lows in here. We had our I'll break it down later, but yeah, that was funny. Sometimes it's just really obvious. And so it is starting to look that way on AU as well on the daily. I mean, look at all these lows. So another perfect example right here. Look at all these lows being built, and then look at this retracement through. These are our low resistance liquidity runs. You want to see these on the opposing side of the curve, right? Another example, boom, right here. You see how when they engineer these lows, these failure swings, and then they get sliced through, right? This is intentional, right? This isn't just, that's not hindsight. Like you will see me calling those moves time and time again, and that is one of the most obvious signatures in my opinion. When you see this, you're looking for a run to the opposing side. Now obviously we need more to that. It's not just you need to time that properly, and you need to wait for the proper confirmation of it happening. We're not just going to short because we see this. But so anyways, a lot of engineered lows, and it looks like this could get absolutely fried at one point, but we need to get that large bullish expansion on dollar for that to happen. And in the short term, I'm actually what did I say I was? In the short term, I'm bearish towards this low and then bullish. So we'll flip, right? Once this gap gets tagged, I'll be bullish dollar towards previous day high, and then we'll see how we expand from there, sweep or whatever may happen, because dollar's just been consolidating. So 4 hour, no bearish fair value gaps. Not much to pull from here, just a lot of engineered lows that will most likely get fried later. Monthly internal tag. Weekly, yeah, just the same stuff with majors. Majors don't look good. It's going to be the same thing over and over again. Same thing, engineered lows. If we get a large bullish expansion on dollar, right? If we have a large bullish dollar, a sustained bullish move, all these lows are going to get fried. Do you believe in the algorithm? In one singular algorithm? No, I don't believe in that. Do I believe the markets are manipulated? Absolutely. Do I believe that the markets print in a way that's very efficient? Yeah. It's how they're built, but I don't think that there's one algorithm that runs things. I think it's all the flow of money. And I think banks and institutions are just buying low and selling high and buying low. They need willing buyers and sellers on the other sides of their orders. Retail plays a very, very key role. I think there's truth to things that he says in terms of, like, I think there's truth to the way the markets book. I don't know how to word this. Like, certain things ICT says, I agree with. You know, needing willing buyers and sellers on the other sides of orders. Like, just thinking about logically how prices are a no-sum game. You need liquidity. You need, you know, someone on the other side of your order. But in terms of one algorithm, one interbank price delivery algorithm, I don't subscribe to that. I think there's tons of high frequency algorithms, and there are absolutely algorithms that are ran, but do I think there's just one that drives price? I don't, personally. It doesn't make sense to me. I think it's all the flow of money. Did analysis on gold, but didn't take the trade because I was asleep when it played out. Yeah, that gold short was nice. I think it was like 11 p.m. for me. I went to bed. I don't trade at night, and I'm not swinging right now, but it was really nice. It was very clear. But yeah, majors are same stuff. Engineered lows. Lots of potential low resistance liquidity run here. No gaps on the 4 hour, no gaps on the daily, just a lot of consolidation. It's going to be the same analysis across the board. Buy side gap, we're flipping on the monthly. Here's our bearish gap. What's up, bro? Tristro, what's up, bro? I remember you. I haven't seen you in a minute, man. How you doing? We have our bearish for value gap on the weekly. Overlapping OB right here. All right. Daily internal. Strong close through it. I'm going to keep these on the weekly for the sake of keeping things clean. It really comes down to that direction on dollar. This draw on dollar for us is going to be very important. Once we hit this 4 hour gap and we go reach for previous day high, we need to see how we fall through. Give me a second. Alright, I'm back. Yeah, bro, I seen your post on Twitter. I seen you getting active. No, I personally don't subscribe to that, Spectre. I think it's all the flow of money, right? That's what it comes down to. So my job as a trader, because I know my model prints well in expansion, I watch the flow of money. I position myself in markets that are willing to expand, that have money being injected into it, right? Wherever smart money's going. But yeah, I'm kind of done looking at majors. Like, we know what we're getting from majors in the analysis at this point. It's the same thing, just flipped. So we need that direction on dollar, and we need to see where we react from previous day high. Do we run into previous day high on dollar and then just sweep that work right back into the range because we've been consolidating, or do we follow through higher? Because like I said, all those lows, all these low resistance liquidity, or this potential low resistance liquidity being built up, if we get a sustained higher dollar, those are going to get, we're going to see a really nice move to the downside on these measures. But yeah, pretty much done talking about measures. I'll look at euro and pound though. Monthly, buy side sweep, weekly, internal tag not following through lower. Whoops, not following through lower right here. We actually swept this low. Again, lots of consolidation, just kind of liquidity being built up here. The last few weeks have been just very range bound and not the cleanest. You have to be very nimble during these. You have to be very, very nimble during these times. You either have to have an edge or a criteria, a framework to trade consolidation, or you have to just be able to sit on your hands and pick your shots well. That's what it comes down to. PD rays are all support and resistance, 100%. 100% agree. The thing about ICT though that I like is it's very, very clear and defined. Like I have always, tried in the past. I had tried pretty much any type of retail concept. I in the beginning I tried supply and demand patterns. It was never defined enough for me, and it never was repeatable in a way that I could find consistency. Like I wasn't actually consistent as a trader until I started trading ICT. And do I think that's because of an algorithm or some crazy thing? No, I just think that it's very clear and defined rule set, and it gave me a way to frame trades in the markets consistently. Like all my trades look identical. And when you're able to have consistency in how you frame the trade ideas, that's where consistency lies, in the results. So that's where I think it's powerful. I don't want to go on a rant here, but one thing I don't like about the ICT algorithm stuff is like people take it takes people out of that probabilistic mindset. Like we're working with numbers, right? If you're doing anything with positive EV, like anything, whether it's poker, casinos, like anything with probabilities and a positive EV, you need to understand that it's just numbers playing out. Like it is all probabilities. And so I think that when people get in that algorithm mindset, it almost takes them away from probabilistic thinking, probability theory, and like being in the right headspace to trade, if that makes sense. I don't want to go on too much of a rant, but that's my opinion. They'll be like taking a loss, and they're like, well, what is the algorithm saying? I'm not on side with the algorithm. What is the algorithm saying? Why did I lose? And it's like, bro, you might have just taken a perfect A+ setup for your model and lost, because nobody has a 100% win rate. I don't care if you have an 80-90% win rate. If you take an A+ trade on your model and you have an 80% win rate, you can still lose. You don't have to, like, some losses are just, and I'd argue a lot of losses when you have that consistency are good losses. As long as you're following the model, it's probabilities. Why are you only trading from gaps as your kilo? I use gaps and external, so gaps and swing points. I use gaps when they're overlapping with order blocks, but that's it. So I use fair value gaps when they're overlapping with order blocks, and then I use swing points and liquidity. That's it. And the reason I only use those is because I believe that's all I need. I keep it very simple. I'm consistent with it, so I don't need to introduce other things. Weekly internal being respected. We have the buy side up here. The daily is consolidating as well. Everything's in that, sustained consolidation like we talked about. Creating gaps out of it now, which is nice to see. Overlapping high right here. Let's peep crude oil. But yeah, you just really got to be nimble in consolidating markets. There's a reason that people say trading is so difficult. It's because these market conditions, they flow in and out. You might do very well in expanding markets, and you might feel like you're printing and expanding markets, but you need to be well-rounded, and you need to have a toolkit to pull from when it's time to consolidate, right? When these market conditions market conditions inevitably switch, you need to be able to adjust. Right, so it's a lot of this is about being well-rounded, but it's also just chart time and experience. Like, you're not going to know how to navigate a choppy range-bound market condition if you haven't been there before. So this is why this is the hardest stuff in the world, you know? You need chart time. There's no workaround for it. Daily internal on Crude. We took this buy side objective. The weekly, yeah, we reached through this weekly. We're not respecting it, right? We're having a strong body close through, which, you know, bodes well for continuation to the upside. This isn't sweeping or respecting it, it's closing through, right? So we may actually want to see sustained higher oil through these highs. These type of major highs are something I talk about all the time, especially to, you know, my students, people in the Discord. You want to gauge the reaction from these liquidity levels because these are major order pairing objectives, right? Like I said, I don't necessarily subscribe to the idea of an algorithm, but I absolutely subscribe to liquidity and, you know, order pairing, order mitigation, order pairing, those things I absolutely subscribe to. So you want to be gauging the reaction from these levels. Do we respect or disrespect them? Internal tag, no respect of that area. Expansion being sustained through. So we may want to just see continued bullish crude oil, but again, there's not much to pull from. Like the higher time frames on all these assets just don't look good. So it's a lot more leaning on the 1 hour, the 4 hour, the 15 minute here, and kind of just being nimble during these range bound conditions. Sweeping this buy side objective, previous week high as well. Daily, failing to respect this gap that you would have wanted to see sustained price higher. Potentially looking for these lows here. 4 hour definitely flipped. Nice fall through here to the downside. We talked about gold here and how this was very clear, right? For those that weren't in the stream yet, the other night I was talking to my friend Zay. Sometimes it's just very, very obvious who's about to get cooked, right? For lack of using that word, sometimes it's very obvious which side of the market is about to get. So yeah, as long as you're able to spot these market conditions, you're able to time them well. Sometimes it can be very clear, and those are the times you want to be getting involved with price. So just to break down that logic on there, well, we had all of this low resistance liquidity being built and engineered. We had our bearish 4 hour internal flip. The daily was closing below this gap, so I'm looking for it to fail to offer fair value and seek this liquidity down here. We have that paired with our 4 hour flip and the internal tag. All of this low resistance liquidity being built, it gives me a very high conviction bias and draw to frame shorts. And so I'm not trading in here because it was late at night, but very, very clean. Yeah, every live stream is saved, so you'll be able to watch it back. But yeah, so gold range bound on the weekly, sweeping that high. Daily, failing to offer fair value, looking at these sell side objectives and lower gold here is what I'm seeing. 4 hours should sustain lower prices. We have these new gaps, right? So when people ask me about looking left, I'm only looking to frame trades off this leg. I only look at the most recent order flow. That's all that's relevant to me to look for the frame trades off of. I'm only looking to frame trades within this leg. And so if this leg's bearish and the lower time frame and the current legs are bearish, then I'm gonna look to frame shorts. But you need to keep that all in context of the higher time frames. Sako, got you, bro. No problem. So we'll see if we want to, you know, continue. Lower here we have this overlapping low at the 4 hour gap. I want to see price reach for these lows on gold. So I'm bearish gold right now. Gold has been extremely bullish, right? Gold has been very, very bullish last few months, but right now, short term, bearish for me. And we are in, like I said, those range bound weekly conditions. So looking for sell side, don't want to get hit here. And gold has some intention, so I like that. It looks pretty weak. Silver, I think silver printed all, no it didn't. I'm way off. I was about to say, I think silver printed all-time highs. No. Definitely not right. Silver did sweep buy side though. We have this buy side being swept. Look at the monthly candle. As of right now, we are respecting it. Still 20 days on the candle, but this is where we're reading that lower time frame order flow. Major order pairing objective, right? What did we just talk about? Well, when these major order pairing objectives get hit, we need to gauge that respect or disrespect here. We need to see if they're sweeping it or they're running it through. Weekly gap right here. Sorry, daily gap, not weekly gap. Daily gap right here to the upside. Wouldn't be surprised if we just kind of mess around in it or even don't follow through from there. Why? Because I'm bearish metals. So we'll have to gauge the reaction here. I could see, you know, price kind of stalling or messing around in here and then ultimately invalidating it, but it wouldn't surprise me if this daily gap fails. And the 4 hour still hasn't flipped, but silver looks a lot stronger than gold, right? If we look at gold, what do we see? Very bearish order flow, bearish gaps being created, bearish intention expansion. Silver 4 hour hasn't even flipped, right? So we have a very bearish gold and then a much stronger silver. So if I'm framing a short idea, I'm leaning on gold, right? That's relative strength and weakness. Very important. Adds, you know, edge to your trading. It's just adding probability. How do you determine a smart money reversal off a daily or weekly PD array? By reading the order flow on the aligned time frame. So if we tag a daily or weekly key level, I'm dropping into the aligned time frame and I'm reading that order flow to see if we flip. So when I say order flow flip, I have a whole video on that, basically just reading the fair value gap. It's also, you know, you can use change in state of delivery if that's something you resonate with more, but I use both. So if I'm seeing price tag a daily or weekly key level that I'm expecting a reversal at, I'm dropping into the lower time frame, the aligned lower time frame, and I'm reading that order flow to see if we flip. So yeah, Bitcoin has been printing. Monthly internal swept the buy side here. Weekly internal tag, this looks good for higher. Just off the bat, this looks really good. This looks, I could tell. I like this. So weekly internal to external, this looks really nice. Respect of the internal. Yeah, very bullish. This looks nice. I want to see higher Bitcoin here. Low hanging fruit buy side objective. Weekly external as well. 4 hour change state delivery. Yeah, this looks really good. I like this a lot. Should see sustained higher prices here on Bitcoin. Looks very nice. There's a very, very significant difference between this chart and then the other assets we were looking at. You know, if we go and we look at this versus something like, you know, I don't know, let's just pick like pound. Not the best. New Zealand dollar, not the best. Versus a very clear internal to external context. This is a very high probability, you know, trading condition you want to look to frame your longs within. Price is expanding and actually reaching for this buy side. So yeah, it looks really good on Bitcoin. I like that a lot. Ethereum, monthly internal tag, we're still respecting it. Weekly. Bearish gap right here. Daily. Bearish gap as well. Looks a lot weaker than Bitcoin. Bitcoin looks much stronger. We'll kind of just have to read the order flow here. We have the daily gap. Do we disrespect this and, you know, just start printing higher and ignore the weekly gap? We'll have to see. It really depends on Bitcoin and the strength on that. So Bitcoin is like the leading indicator for crypto. All right, so everything's gonna follow Bitcoin when it comes to crypto. But I'm not the biggest crypto guy. I don't personally trade it. Like I'm not actively trading crypto, but it's fun to watch. But yeah, I think that's pretty much it, right? Bullish indices, bearish gold, bullish Bitcoin. Those are the main things that are sticking out to me right now. Dollar, I'm picking my shots. It's consolidating. I'm waiting for clarity on dollar. I'm waiting for, you know, dollar to really show some intention before I try to, you know, put risk on for the majors. So that's really what stands out to me. Again, just to run through that. Indices, bullish, bearish, gold, bullish Bitcoin. Those are the things that are standing out to me. So that's where your eyes should be this week, right? We're literally doing these weekly forecasts every Sunday for free. I give analysis in my Discord damn near every day for free. I tell you where your eyes should be. You know, there's no excuse, you know. If you're not putting in the work in, that's on you, because we're pointing you directly where your eyes should be. You know, it's just on you to show up to the charts, put the screen time in, and get 1% better every day. So I'm invested in all your growth. I appreciate you guys tuning in. I appreciate you guys, you know, just, you know, showing up every day. Like, it's awesome. I love it. Very grateful. So can't wait to watch you guys continue to grow. And hop in the Discord, man. Hop in the Discord if you're not already in it. And check out the Academy. The link's at the top left of the screen. So yeah, appreciate you guys. Thanks for tuning in.